Good evening. I'm Epstein with your SPDR ETF stock market wrap-up, and this wrap-up is for the evening as we're here now on Tuesday, the 12th of December, 2023. Third highest all-time high close in the Dow Jones. So that gives you an idea of the power of this market. It is not looking backwards. It looked at today's CPI, and CPI today was not a friendly report. It wasn't bearish, don't get me wrong, but you're not watching it fall. It's doing just what we talked about here. It is sticking. And you are stuck at the 4% level when you go to the core CPI, and that is not falling apart, and that has certainly got the Fed's attention. However, it is Christmas. The Fed isn't going to raise rates here, not in my opinion. What the Fed will do is they'll say that they are watching it, they are data dependent, and they will sit there in a pause. That is what I expect. Then we get on Thursday a number of central other banks. We get the Bank of England, the European Central Bank, Swiss National Bank, Norge Bank. They'll all come out. I think they'll do something right along the same line. January is a whole different game. Then we have to take a look and see what's going to happen there. Is inflation starting to fall? I mean, how long can you stay sticky without saying, what do I do to get you off the sticky part? And I'll tell you what that is. It's either time where the lag effect works or the Fed has to goose rates again. And that's what the other central banks will be looking at. The same dilemma that they've got. Some might see that inflation number actually fall, and the banks will then start moving. The one that they think will be one of the first, European Central Bank, to make that, we'll find out. But the European Central Bank has a different problem. They still have their other program in, their equivalent of when we had our quantitative easing, when they are still actually buying bonds and notes. They got to get rid of that quick, because in order to do that, they have to shut that off if they're going to go the other route, all right? You can't be at one hand coming in and cutting rates, and at the other hand, you're still buying all that debt. It's got to come off in some manner, and we'll see which way they go. All right, so that's where I think you're at and what you're going to be looking at. Now, McDonald's, they're cosmic. Market up again today, another $2.27, nearly a full percentage point. I think I was right. I think the market is taking a look at it, and they like the new product that they've got there. The pattern on the chart is higher lows, higher highs. You had a bullish crossover where the 18-day average crossed the 200, and the market is lifted over everything. But this is the zone. I must tell you that the way that I teach Bollinger Bands, this would be the zone now where you take some money off the table, because it's the first challenge of the Bollinger Band that is embedded. If you're following this, the opportunities to buy probably came in over here, and you take some money off the table. I didn't say the whole position, but when you hit a Bollinger Band, the odds of staying it are 5% of the time staying above it. So why not grab something, and on pullbacks, if you wanted to buy, you're playing the game. In Rivian, in fact, all the auto manufacturers that are electric, they were down today. And, you know, again, I'm going to repeat. The American public, for the moment, has lost its appetite for these expensive cars. It's that simple, and they are expensive. So the key to the automakers is find the way to lower the price. How do you do that? You attack the battery. And that's what I think is going to be done all over, that there'll be different ways to do it. But here, too, you got to the upper Bollinger Band. You know what I said. You weren't embedded in this case. I think the pros were coming out earlier, right over here. Now you're pulling back and you're out of the uptrend. You're not in a downtrend. You're just out of the uptrend. On the energy market is saying several things to OPEC and other oil producers. Number one, it is saying that if there's economic slowdowns across the board in 2024, oil at these prices is a bit expensive. Number two, there's market, while we keep hearing the market will become in supply, not oversupplied somewhere in the first quarter. Right now, the market thinks we're oversupplied. Number three, I think what hurt OPEC, not OPEC, but oil today across the board. I don't know if you saw what the economic council out of China did, but they did nothing. Again, we had the Politburo, now we had the and this is it. And they didn't come up with a plan. A lot of talk, but no details at all. China has to do something for that. Now, don't get me wrong. China can still buy oil for storage, but if you're telling us all that China's economy has picked itself up, it hasn't, they shot themselves in the foot. Their methods, the way that they do, they drive out supply chain people, they steal technology. I mean, they're a wonderful place not to want to do business, other than they have a heck of a lot of people. But maybe there's other ways to service those people than giving China the technology as to what they do. Plus, the world relied on them so much for the supply chain that when COVID hit, they realized, at least everybody after the fact realized, not the best place to do business and rely on all your supply chains, so they've moved elsewhere. They're still in China in a huge way. Don't you think that's not the case? The reliance, though, is getting split by Westerners. They're moving out as fast as they can in terms of diversification. We'll let them have some. We'll have other parts of Malaysia, Vietnam. It's all over that you are seeing that. Then we get to XLF, the financial services. Well, this will go up until it's tired of going up. I don't know what else to say. The market is building in right now in every way that the Fed is done and they're going to drop interest rates. Now, when will become the big debate? I am not in the camp it's the first quarter, and I question from what I'm seeing on the CPI number if it's even the second quarter. How's that? I can see it picking up late second quarter, maybe. Certainly the third quarter, but if CPI stays this strong and hangs in at that number, the Fed's not going to lower rates to spur on an economy that still has this inflation. It's got full employment by most of our standards. I even heard some stories that this isn't considered full employment. Nonsense. 3.5, 3.6, 3.7%. I've been around this a long time. That's full employment. XLI. What you have right through here, still embedded. Market's still looking to me like it wants to stay up there. Again, first challenge of the Bollinger Band. Pro's probably taking some money off in front of tomorrow. I'm not surprised that you're down in AMC, as I told you. I think the $7 area is a pivot zone. The market just back and forth here, no trend, hanging in. You got to wait. And again, I'm not sure we're going to have any real blockbusters. If Aquaman doesn't do it for the theater, what the heck is going to? And that's my bother. On the other hand, having owned a theater, I can tell you those big movies are waiting out, and they're going to come at you in the late of the first quarter into the second quarter. Probably going to have a strong summer this year. In our SPD, in looking at the movies and looking at the market, the consumer that is dead. Do you not read what I do all the time, these reports? The consumer, he's over. They're buying with a firm. They're buying left and right. They have no money left between the school that they got to pay the loans, between high interest rates, they're done. Market's saying they're not done. Okay? All I ever grew up with was the consumer's done. They can't afford anything and they keep buying. That's what I've learned. In XHB, the home builders, another one of these deals where it's IRA, third party I'm talking. When we were down here, I said, hey, folks, if you remember me saying this, I said, I've lived through this cycle. Home builders figure out ways to buy forward mortgages. So if they're 7%, 8%, they'll get them down for you 2 percentage points. They'll teach you how you can go in the refinance. They'll offer to pay the refinance fee if you can get it, where you get it, how you do it. And they not only stayed alive, they're going to live for the next cycle now. And that next cycle, if you can crack the 7% number in mortgages, you're going to open up a floodgate that happens in the spring. Now, that floodgate will also probably create lower house prices. Be a combination of two things. Suddenly, supply will appear, and the public will adjust to higher mortgages, and they'll be buying it. These people are in pretty good shape. You'll get corrections along the way, but I think they're in good shape. Energy, you heard my talk already on this. I think energy prices are going to test the downside and surprise people as to how much they could drop. In the gold market, I had somebody write me today and complaining, Ira, you said that if gold got over 2070, it would take off. Now, let me think. It went from 2070 to 2152, That's an $80 move. It all happened, kaboom, it happened. Now what's happened is the market is looking at the headwind of the dollar. So this is your big pullback. If inflation does what I'm saying and it stays sticky, this big break in gold will get itself overdone, and again, it'll get itself back into balance. So you've got to keep your eye on it. The other thing that happens is if we start cutting interest rates next year and inflation's still relatively high, I'll define that as it can have a 3 in front of it on the core, but it's probably over 3.6, 3.7, 3.8, 4%. That is still relatively sticky to speak. Gold lives in that environment. SLV, this isn't about inflation. This is about U.S. production that has fallen down. But as you know, I think that unless the silver gets back under this low here, this is your big test. The market has come down so much that I think it'll feed on itself if it can get a bounce. It is not a place where I'd be telling traders get short in these areas. Copper, disappointment. China's economic council did nothing. So, and they, by the way, they mentioned not one word about the existing developers, the program they're going to get going. Now, I am certain we're going to hear something somewhere, but you had to walk out of that going, what the heck? They keep saying they're going to do things, they never do them. That isn't how you turn this around or give people confidence. You can make all the edicts you want. We're going to be strong. We're going to do this. How? I want to win the lottery. How? You got to buy a ticket, but how do you win beyond that? Higher lows, higher highs. You can see how the game coming down. You're losing the embedded reading, which is just what I would think. So the pros, in my opinion, out tonight. Whenever you get that, could they come back in? Yeah. Tomorrow could be the day where they jump back in and you re-embed. But until they do, the way I teach charting, I think they came out of that, and BND probably too. When I look at UUP, the dollar, overbought, had a nice rally into this report. I don't know. What do I teach you and my clients? You're standing on a rail, a bullet train's coming at you, and you're decided you're that good, you're that fleet, you can jump out of the way at the last minute. Why on the rail in the first place? FXE come down, you get to the 100-day average, challenge a Bollinger Band, you're turning back up. That's all it is. These markets are going neutral on you going into the report, and that's what you learn. Now, tomorrow's going to be a fun day, all right? I'll be talking to you about what we see going into the 1 o'clock report tomorrow, and that's going to be just super important. I start you off each morning, be it in the futures, when I start my 5:15 in the morning recordings, or I typically record at 9 o'clock, my SPDR-ETF. I go through all the day's first events, all the fundamentals, the economic reports coming out, what the market's looking at overnight, where we're at. We'll cover markets galore, but there'll be way more than those done. I rotate everything for you. I switch you back and forth between daily and weekly charts. I look for recommendations that I think make economic sense, along with lots of chart sense. Economic, and did you have a vertical rise and you're suddenly coming in the market? Where would your stop be? Why are you coming in? Or a vertical decline? I put it together and away you go. So how do you get a trial? You heard what I said. Get a trial to it if you want. Go to iraepstein.com under free trials. If you've had your free trial, just go to iraepstein.com under the word research. The price for 30 days is $8.95. When I go to Starbucks and I buy a large drink with my tip and all, I'm in that zone. You're going to get 22 videos a month, each 15 to 20 minutes long, covering the whole market spectrum. I'm Ira. You have yourself a great evening, and I will talk to you first thing in the morning.